The ongoing trade war between the USA and China, COVID-19 restrictions, and power outages have had a significant impact on China's economy through 2021. Trade wars and COVID-19 resurges may continue to wreak havoc on the economy, but new issues are expected to emerge in 2022. Combating the housing slump and inflation and fostering economic growth for all are among these goals. At the 20th Party Congress, which will take place in the second half of the year and is widely expected to give Xi Jinping a third term in office, risks will be tightly controlled. Some of China's real estate developers, most notably Evergrande, defaulted on debt repayments due to increased financial restrictions in 2021. In commercial sales and real estate investment, there has been a decrease in growth. Property developers' debt will continue to be an obstacle to financial health in this industry. As a result of this economic work meeting, it was determined that more affordable housing must be built and that the commercial housing market must be adjusted to better meet the housing needs of buyers. Consumers use this industry as a major investment channel, and local government policies quickly shore up falling home prices. In the meanwhile, the government is helping the construction of affordable housing in an effort to alleviate the difficulties faced by consumers in purchasing new homes. Watch this video to understand why we think China is on the verge of the biggest crash in history. A historic economic collapse in China's near future will necessitate years of recovery. The impending crash in China will be similar to Japan's devastating market crash of 80% in the 1990s, which was also devastating for China. Despite 3 decades since the Japanese stock market crash, Japan's stock market is still not back to where it was in its glory years. A series of events precipitated the stock market collapse in Japan. There are numerous signs that China's economy has already collapsed, but you're not aware of it. Over the past decade, China's housing market has ballooned significantly, as evidenced by the steady rise in Chinese home prices, an impending burst of the Chinese real estate bubble in a major way, which is unknown to most investors. There is a striking resemblance between China in 2021 and Japan in the 1990s before we get into indicators. During the past 2 decades, Chinese real estate developers have taken advantage of leverage in order to rapidly grow their property portfolios. This is great news, but the market is extremely vulnerable as a result. As the world's most indebted real estate developer, Evergrande has demonstrated by defaulting on its debt obligations. This is not unprecedented. Other Chinese real estate companies are following this alarming pattern. A market crash, similarly that occurred in Japan in the 1990s, is all but certain when there is this much leverage in the market. The Nikkei 225 index in Japan fell by over 80% from its record highs between 1990 and 2003. A quarter of a century after the Nikkei 225's all-time high, investors in the index would still be losing money. Imagine investing in the S&P 500 for 30 years and still losing 25% of your money. People all over the world would be harmed if China were to experience a financial meltdown of this magnitude. Exactly what is the big deal about all of this? According to the credit analysts Moody, over 70% to 80% of China's household wealth is invested in real estate. The entire global economy will be paralyzed if the real estate market collapses 80% as Japan's market did. Almost all goods that are produced in the world are sourced from China. Consumption around the world would be affected if China's economy suddenly slowed down due to a real estate crash. The Chinese property crisis is expected to worsen in 2022, as companies face debt repayments that are 2 times as large as those in the final months of 2021, putting the world's second largest economy at risk of what one China expert calls a systematic crisis. China's Evergrande woes may have subsided in recent weeks thanks to a massive restructuring effort spearheaded by the government, but the company missed a bond repayment of $255 million on Thursday, and the debt problems that have brought the country's second largest developer to bankruptcy are plaguing numerous other businesses. As of 2022, the World Bank expects China's GDP to grow at a rate of 5.1%, which is significantly lower than China's average growth rate over the past few decades. Nomura analysts estimate that Chinese developers owe $19.8 billion in dollar-denominated foreign debt in the first 3 months of 2022. Evergrande and several other developers faced a $10.2 billion debt burden in the final quarter of 2021, which led to a default at Evergrande and the threat of default at several other developers including Kaisa. This new debt burden is nearly twice as much. Debts owed to foreign investors aren't the only issue, however. According to Nomura, developers must also find $172 billion in backdated pay for construction workers before February's New Year, which marks the beginning of the Lunar New Year. There is no respite when it comes to the second quarter of 2022. China's Shima Group is the most recent property developer that has defaulted following Evergrande and Kaisa. This raises concerns about a wider crisis in China's heavily indebted real estate market. Debt repayments are already a problem for some Chinese property developers, but imagine what will happen in the months to come. Beijing's crackdown on real estate, technology, and education has made it clear that the Chinese government sets the rules for private companies. In 2021, China's crackdown on private enterprise reduced the market value of some of China's largest companies by more than $1 trillion. To maintain a tighter grip on the economy, officials in Beijing have emphasized the importance of high-quality growth so that the general public should benefit, rather than simply increasing GDP. The CCP is currently enacting strict regulations on real estate companies in an effort to provide citizens with more equality. On the surface, this makes sense, but we believe that such actions are akin to tinkering with a match. In the end, people who play with fire end up getting burnt. Many commodities are almost entirely dependent on China's demand, which accounts for 15% of the global GDP. Iron and copper are two of those commodities that are currently experiencing a steep decline in price. Thanks for watching, don't forget to like our video and subscribe to our channel to get more updates.